a bear market. So if we traditionally use, a 15 to 20, say we trade a 20 delta in a regular market. Well, one thing that we can do during a bear market is shoot for a lower delta, go further out of the money. Maybe we go to a 15 or maybe we go to a 10. So it gives us a lot more kind of downside cushion. And what generally happens is that when IV goes up, we're able to collect just as much or maybe even more credit by going to those lower deltas when IV lifts up. The other approach that we could build in is we could go out further than the 7 DTE. We could sell them every 2 weeks or do a 30-day. And what that will do is give us even more cushion, and we can manage the claim, the trade for profit, when we hit certain income levels anyway. So it doesn't mean we have to stay in the trade that whole time. It just means that we now have more time left in the trade in terms of time value, and we'll receive more credit for more, even going further out. And then the other thing that I've been experimenting with is if we go out and sell, like if we're normally selling that 15 to 20 delta, if we go out and we say, I'm going to sell the 7 delta put, I'm going to give up a lot of credit, but I have a lot of downside protection, right? So to make up for that, we would just add a call spread on the same trade using something like a 7 delta call, making it a really wide iron condor. And that way we have like a 90% chance of both legs finishing out of the money. And we haven't done that yet, but that's something, we're looking at and testing out as we go into a bear market. Because if it's a bear market, those call spreads are going to make us a lot of money when the stock goes down. And that will help offset the decrease in credit we would get on the put spreads. And we can do the same thing using further dated options as well. So it's just something that I just wanted to throw out there. That's something that I'm looking at for if we go into a bear market and we want to get extra conservative and then find a way to add some additional income in there. That's one way to do it. Any questions?